And welcome to About Money. We are going to be talking about money. We're going to be talking about China once again. We talked about China in a previous program. Let me give you a little bit of background before we launch into today's program. We talked about China being a nation that had a GDP of $92 billion in 1970, was backward, was not really part of the world scene. But by 2022, they had grown to 13 trillion. They'd grown their GDP by over 180-fold. Consider, the U.S. was $1.5 trillion, and we grew to 18 trillion. So there's been a big growth in China. And they had a very specific way in which they did that. They patterned after France. France in the 1600s did what was called the royal privilege, essentially the same thing that China copied in providing the land, the infrastructure, the banking, the financing, and helping companies and going out and recruiting companies to come into China to manufacture in China. And then 70% of China's exports work from companies that were foreign companies. That's what I'm trying to say. I'll get it out one way or another. That's what happened. And China wanted to replace the United States. They did two programs. They did what was called Built in China 2025, in which they wanted to be the world leader in medical devices, in mobile devices, in electric vehicles, in agricultural machinery, in communications, and robotics, and several other areas as well. That was their focus by 2025, to replace the United States as the world leader. And they wanted to replace not only in technology, but they wanted to replace the United States economically and militarily. They wanted to become the world leader. That was the focus. And we talked about some of the limitations in a previous program. We talked about the Biden administration restricting the chips. And that's a significant factor because China needs those very small chips in order to power their military equipment, in order to power the computers and computer type equipment. We talked about the real estate disaster. But all of this comes and all this focus comes following Xi's consolidation of his role, and he has now cemented himself as the leader of China, maybe the most powerful person in the world. That is Xi Jinping.
Yeah, Mike, he didn't get his start on some poor farm in China. He grew up fairly wealthy. His father was part of the Mao regime, and he started with them in 1974. And so Mao was a hardliner. And then when Deng Xiaoping came in after that, he kind of softened things a little bit. But now that Xi is in power, he's kind of reverted back and consolidating power and taking more of a hardline stance, almost like Mao did.
What's interesting to note too is Deng in '82, he actually is the one that put in the 2 consecutive term limit. He was the one that implemented that, and now that's recently gone by the wayside with what she's doing.
Yeah, she is now in this 3rd term.
Yeah, and most people probably saw this, but she actually recently removed Hu Jintao, who was the previous president, the predecessor to Xi. And he actually, the Chinese media said that it was a health-related problem, right? But then there's been no talk of it. It's not on the social media in China. It's really nowhere to be found. But when you look into it a little bit more and you look at some of these articles, it's really comes down to a power play.
It seems to be, because if you saw it on TV, and I believe a lot of people saw it on TV.
The Chinese didn't. They actually cut it out. Nobody in China right now actually saw that clip because they were able to cut it. I read it this morning.
But we did.
But we're on different VPNs.
I know. Yeah. But I mean, if you see it, you can see who sitting next to Xi. And when they tap him on the shoulder and get him up, you can see the shock and surprise on his face. And he says something to Xi, and she just kind of ignores it. He says something to the person next to Xi, and they just push him right out.
And what's interesting is if you look at the video, he's actually holding a folder. And I don't know what's in that folder, but he if you look, he has his hand on it, and the end Lee, I believe Lou or something like that, was sitting next to him, and they attempted to take it. And when they couldn't, they eventually, there was like some sort of nonverbal, and a guy came over and removed who. And I want to know what was on there, because earlier in the night, he had actually voted. He was able to stand up. I don't know how they vote, but I guess they go to like some podium, and I don't know how it works, but he was able to get to that podium and vote. And now all of a sudden it's a health related issue like an hour later. Doesn't make sense.
Remind you of who's on first. Okay.
But ultimately, it's really coming down to a playbook, and it's a playbook that we've seen a lot of different, communist leaders use over the years. Putin's used it, right, when he poisoned Alexei Navalny. How do you say that? Navalny. There we go. When he poisoned him, right? That's any sort of opposition to the ringleader. It's going to be killed. North Korea did it. Kim Jong-un killed his half brother, killed his uncle. The Chinese actually tried to overthrow Kim. That was a really interesting point that I read this morning as well. But it's following this similar playbook, and it's a consolidation of power.
Yeah, but the big question is it going to help them get to where they want to get to?
Yeah.
I mean, that's the $64,000 question, right? I mean, they want to dominate the world, and here's the question, Mike, Chris. Can a country become dominant? Can they become an advanced economy without democracy, without having voting, without those type of first world things that we all take for granted? Can that happen?
That's a really good question.
It's the question that really faces China right now.
Now, some of the reading I've done said that this was from Asia Today, writing saying that they're close to past what's called this trap. It's called the middle income trap, and it's something that was defined by the World Bank in 2006. And the definition is as a country that gets to a certain point, they get out of the poverty, and they get to this point and they can't grow past that. And a classic case of that is actually Brazil. For the last 40 years, Brazil has been stuck in the middle income trap. They've never been able to advance their economy past that.
Why is that?
Because they start out as an agrarian, right, with agriculture, right, and then they move towards manufacturing and start that process, and they never can get over the hump to a highly technically advanced economy that's not just manufacturing, and that's where China is. So they get stuck in that realm, and they don't move past it.
You can build a lot of steel plants, aluminum smelters. You can build chip manufacturing plants. You can build bridges and roads and houses and family dwelling by putting a lot of money against the wall. Mm-hmm. But that's all government money that's going in or financing that. I think the question you're raising is, how do you convert to a consumer-driven economy?
That is the next question. How do you do that?
Well, especially when the dollar's is strong, right? They're an export-based economy. Well, with the dollar, increasing in value, I mean, seemingly there's going to be less, imports for us, exports for them. So is that a model that's going to last here in the next?
Well, that's another great question. Is that as they do that, also they're going to think about stiffer competition, because they're going to have to raise their prices for their economy to keep growing. And can they do that? Or are people just going to leave and start? We're seeing that now, right? People are starting to pull away from China. They don't want to be tied. There was an article this week just on, I listened to on National Public Radio about Germany, because they had just taken 25% of a port in Hamburg, and they're starting to think, do we really want to be tied like we were with Russia and have only this? Because that's Germany's largest trading partner is China. Do they want to be tied to that? For one.
But part of the Belt and Road Initiative, which we talked about before, is China understands the difference between Russia and China is China understands, let me say it this way, it's easier to buy a country than to invade one.
Yeah.
Russia is finding that out. But China's Belt and Road Initiative was to go into different countries, loan them the money for ports, for railroads, for highways, for power stations, and then do it in such a way that very often those countries defaulted on the debt and the Chinese companies were able to repossess it.
And there's actually a term for that.
Yeah.
It's called debt trap diplomacy. I thought that was pretty good.
And that's been part of the focus of China, is to do that with the Belt and Road Initiative. And it's created some very difficult problems. If you look at Sri Lanka, perhaps as an example, Hambantota was the number 2 port in Sri Lanka. The Chinese came in because Sri Lanka wanted to upgrade it and increase the revenue coming through the port. So China furnished the money, furnished the labor, and when Sri Lanka wasn't able to pay off their loans, the Chinese repossessed the port, and they now anchor a quarter of the Chinese or a half of the Chinese Navy in Hambantota. We're coming to a commercial break. We'll come back and talk about, it's not just Hambantota. It's a lot of other ports where they're doing exactly the same thing. Stick with us. If you missed part of this program or some of the previous programs we've done on China, you can find those on About Money on YouTube.
About Money with your AFC team, Mike, Chris, and Al on AM 1300 The Answer. For more information, click on adamsfinancialconcepts.com.
So, Mike, you were talking about the ports. You were talking about what they did in Sri Lanka. Let's bring that into the Western world. They took over a port. They were only supposed to take a piece of it in a port, Piraeus in Greece.
Mm-hmm.
Now they own that port outright now, 100%. They came in to take a part of it, and they said, "Oh, we're not going to make it a military base." But according to the Greeks, the military ships from China have visited. How it's like a visit from a military ship from your foreign port, and they own now. The European Union did this. The Greeks were not happy with this, and a lot of the countries weren't. And they own almost 20 ports around Europe, and they're calling it the Europeans are calling it the Anaconda. They're basically going to strangle Europe because they own and have a significant portion of all the ports now in Europe. The most recent ones I mentioned is 25% into the Hamburg port, which is one of the largest ports in Europe.
No, Al, when you say they own the port, what does that mean? Is it still owned by the Greeks or the Germans, or is how does that work?
The Chinese COSCO shipping company goes in, and they're basically a front for the government, and they basically buy up the port. They bought the whole everything, all labor. They control all the labor, and so there were stories in Greece. If you go listen to the stories, it's from 2018, and it talks about a guy that'd been at the port for 35 years, and he had a pension and all these things. He was pretty much okay, but when he talks to his friends that were still working there was no more pensions. There was no more. These guys were working like dogs. They couldn't take breaks. They were peeing in bottles because they wouldn't allow them to take breaks. And there was there was talk of getting together to unionize. They were fired.
Yeah, they don't have the same laws as we have in the United States.
Yeah.
Now, Costco, that's a state-owned, right, by the Chinese?
Government financed.
Government financed, but is it completely... obviously, the Chinese own at least 5% of every company, right? But is that a company that's basically, 90% owned by the state?
Well, they're all owned by the state, right? He can come in and capitalize and take anything he wants. Right? So it doesn't matter whether you... Look what happened to our friend at Alibaba, right? When he spoke out, boom, gone, right?
Yeah.
So they're going to take anything they want. So you can... And that's the question of can they get to can they become an advanced economy? Is entrepreneurship dead in China because of the way they run things?
Well, we had previously talked they can't innovate, right? Like in a previous program, we had talked about the ballpoint pen and how, it took them until 2017 to finally be able to manufacture the entire pen inside of China, right? It took them 5 years to figure out that ballpoint because they didn't have the technology for it. They just could not figure it out, right? And so... their playbook is to either steal buy out, or I think that's pretty much it. They either steal or buy things out. There's really no innovation in China.
No, or they invited companies to come in, as they did with the tech companies in the 90s, and said, oh, yeah, come in to Nortel Networks, who's now went bankrupt, and said, come in and, yeah, we'll help you. You can have access to our markets. And they would just steal the technology and become, to their own detriment, to their own, greediness. These companies went in thinking that they were going to get something out of it and got nothing. They got the technology stolen and put out of business by competitors. And
it's been something worldwide. China's been so attractive because they have a middle class that's approaching 400 million people. And middle class is a very large group, but it's people that are actually consumers and not just living on subsistence. And so it seems like a very, very attractive market. So the Western companies or the outside companies come in to manufacture, to make products. They get financing, they get development, and so on. So it seemed to be just an optimum kind of thing to do. Mm-hmm. But as you said, the Chinese have not. They innovate, they copy very well, and make small changes to the technology or changes to the technology, but they don't really develop something brand new.
They're good at reverse engineering. That's why I had forgotten earlier. But what's funny is, look at China right now. Look how many cars in China look like the Tesla. Like Huawei's phone. Doesn't it look awfully similar to the iPhone, right? They're really good at copying it.
You want a really funny story?
Sure.
When they were inviting Nortel Networks in for their fiber optics and their equipment to come in, one piece of equipment, they had taken it apart, like Chris said, and reversed engineered the whole thing. And so it was a pretty expensive piece of equipment. So the gentleman who did that, Nortel Networks had their plant, and it was somewhere outside of Dallas. The guy actually took it back to get a refund on, and they couldn't figure out why it was all taken apart. They're like, why is this all taken apart? And they realized, he had taken it apart to figure out how it worked, and basically said, I'm going to get my money back. That's when they figured out, hey, wait a second, we're kind of getting screwed in this deal.
Yeah. And anyone that makes a fuss about it, China just buys them out. They just buy out their influence. And a great example is, in Southeast Asia, in both Laos and Cambodia, very close to China. For a long time, they had condemned some of China's behavior, right? And they're big opposition to it. But recently, China has just given them a ton of money. They lend them money, and they just say, hey, this is how things are going to work. So very interesting.
So let's come back to this middle income gap. Mm-hmm. Because it's really crucial to see if they can actually make the next step. And it will have an impact. We'll talk about the impact it'll have later in the program, but let's talk about what's going on, what's happening in China.
Well, according to this article I read from Asia Today, this gentleman says they're close. This guy's name is Justin Yufin Lin. He says they're close. He said in 2021, China's GDP per capita reached 12,551 before July 21st. The threshold for high-income countries in the world was 12,535. If we use the old threshold, we became a high-income country last year, he says. But they changed the numbers a little bit, so they didn't quite reach it. But I'm not saying they won't reach it, but are they going to? Do they have the ability to stay there? That's why the chip thing is so crucial to them. Do they have the ability to stay there and become advanced? And moreover, is it to their death that they do? Because people are going to, if they have a consumer economy, people are going to start to demand more rights. And what's that going to do to them?
Yeah, that undermines the power of the government.
All the technology they've stolen, they've either used to take over other countries, take over ports and for their own gain, but they've used it against, most of it they've used against their own people. It's to monitor their own people. They have a massive monitoring system of their own people, of their internet and everything. That's why these companies in the early 90s, Mike and Chris, thought, we'll go in there because the internet, like it did to Russia, right? Russia was the classic example. Information came in, and they realized, hey, wait a second, we don't want this wall. We don't want to be told where to go. they thought that would happen with China, but it's taking longer. It didn't. And the middle income gap actually can last a long time. They hope to be on parity by 2050 with per capita income with the United States.
So there's some difficulties to get there.
There is.
Number one is, or one of the reasons is the gap with the one-child policy. When that was implemented, the average life expectancy of Chinese people was 64 years old. So that you had plenty of workers to support the older people.
Yeah, and
they've
they've got rid of that. How many years ago? Was it 5-7 years ago they got rid of that?
Yeah, but the problem is it's already been around for 30 plus years, and you're seeing the effects of it.
No, but that, not even that, Chris, is that when you, just regardless of that, when you become, as your economy grows and you become more an advanced economy, you could come out of if you make it out of the middle income gap, people have less kids. And so this 400 million that you're talking about are thinking, why the heck do I want that birth? And they don't want maybe one kid, no kids. Their birth rate is less than, I don't know what it is, but ours now is less than, is 1.4.
1.6.
1.6.
Yeah.
Okay.
And the replacement value of that is 2.1 is what you need.
2.1 for them?
No. They're 1.6.
Yeah.
But what they need is at least 2.1.
And remember, the average life expectancy, as they've introduced Western medicine and Western technology, they're up into the 80s and 90s now.
And they have a huge demographic problem with elderly. The elderly population has exploded there. Mm-hmm. And that's a huge problem for them that they haven't faced yet.
And they're soon going to reach the point where they have one worker for every retiree. Mm-hmm. So what do? Do they increase the retirement age to 75?
Well, there's even more when you really flesh this out, and I call it the one-child syndrome, right? Typically children, when they grow up, they don't have to share their toys. Both parents are completely focused on them, right? There's issues that come about. And when I was reading, and if you look at Sigmund Freud, who is a famous psychologist, he believes that the only children are prone to sexual identity issues and suggests that parents adopt another child. And so when you start fleshing this out a little bit more, there's actually an article, and it was put out by Japan, and it says that 50% of Chinese men between ages 15 and 35 are unmarried. And approximately 360 million of those men under the age of 35 are determined unable to marry. And when you really start going down that rabbit hole, you find out that there's this hidden sex industry in China right now, right? And these unable to marry men are relying on, the sex industry. They're relying on their own techniques, if you know what I mean. And most of these people, they have a disposable income of less than $5,000. And even in this article, it said that 20% of youth are unemployed and aren't even looking for jobs. And so you see this over 30 years. There's all these only children, and it's starting to bleed into a lot of different areas.
And that's going to really handicap the ability of them to continue to grow their consumer economy. And without the consumer economy, can they really catch up with the United States?
They don't want to work. The youth don't want to work. And why would you?
Yeah.
You're going to inherit mommy and daddy's, wealth. You have no one to share between.
You're getting some insight into a country that wants to become as dominant as the United States. So we've been talking about the social situation in China with the one-child policy, with the single males, with that. But you also have to think about education, right?
You do, because countries with poorly educated population are more likely to succumb to the middle income trap. Secondary education to be, junior and high school education. This author of this article hypothesized the middle income countries with fewer high school graduates find it harder to move up the market when challenged from below than other late industrialized low labor cost countries.
And when you look at the United States, where we are, to do a comparison, we're pushing for free college education. The Western world and Europe, free education, send students to universities. We're sending people to community colleges, to universities, to specialized training. When you are educating your country to a junior high level. What does that mean?
It can't be a good thing.
I lost my space here. but-
It really can't be a good thing.
No, because the country's population, age 15 and older, have an average of 2.65 years of secondary education. Less than middle-income countries' norm of about 3 years. So most even middle-income countries have a higher education attainment than the Chinese have.
Yeah.
So that's a risk factor. We also talked about the other risk factor, Mike, is high investment shares of GDP. Right? Beijing's effort to generate high GDP growth have required countries to sustain unusually high investment shares of GDP, 44% in 2016, versus a middle-income norm roughly of 20 to 30%.
Well, and Chris, you talked about the GDP that's going into housing.
Well, that's I mean, and that's traditionally in the Chinese culture, everything is built through housing, right? Because you can live with it, and they stopped making it a long time ago, right? And the household debt, basically, in these Chinese cultures, they build most of their assets through the housing market, right? And so, between 13 and I believe it was 17, when they were pre-selling a lot of the houses, and they built their economy through just the housing market. And I guess my question is, once it's all built out, how sustainable is that model? Especially when I believe 63% of GDP is from the housing sector. Is that correct?
I think so.
Yeah.
It's very, very high.
And the other thing we didn't mention was the undervalued currency. According to these studies, that undervalued currencies, countries have a harder time breaking out of it. You'd think it'd be an easier time because money would be cheaper, but it doesn't work that way. They have a harder time breaking out of that low wage, sector to, they find it more difficult to have rapid growth. So
it's all compounding. A lot of social issues to work through. A lot of economic issues with the way their GDP has grown, and give them credit for going from 90 billion GDP as a country to 13 trillion. That's a significant achievement.
it is.
But how do you go from there? I think that's the question we're asking. And their focus is, we want to be world leaders. We want to replace America as a world leader. We think there's some issues with that.
Well, and they're focused on manufacturing, right? So if there's a lack of education, they're focused on manufacturing, and meanwhile they're raising the minimum wage, which is going to slowly, price them out of this low-end market, right? It's going to make India, Vietnam, some of these other countries more attractive. Everyone says there's a crisis brewing. They've been saying that for a long time, but it's hard to look at these facts and not say there is a serious crisis brewing. It's not sustainable what they're doing.
And you compound that with the fact that they're not going to have the high-end chips to get to where they want to get to. And it might take them 20 or 30 years to build those factories and actually get the technology to do that if the countries that build those say, no, we're not lending you the technology to get there.
But that's not part of the playbook. Remember, they reverse engineer, they steal, or they buy out, right? Well, just across, 100 miles away, if that, there's a little island that's really, really good at producing these high-end chips. Man, that must be attractive if you're, the Chinese government.
Yeah, but which company was thinking about moving their manufacturing out of Taiwan and bringing it back to the United States? I just read it this week. There was one of the companies.
Taiwan Semiconductors.
Were they moving a factory over here?
They're going to build one in Texas.
Yeah. So what does that tell you? They're going to say, okay, come and get us. There's nothing here.
They have to. But again, that's not going to be overnight, right? So we're in kind of this window right now before some of these new manufacturing plants can be built. And what's currently right? And there's like this window right now where they're not up and running. And the only real spot producing these high-end 2 nanometer chips is Taiwan.
Or South Korea.
Or South Korea. Samsung.
But Taiwan has to look so attractive to mainland China. Mm. And in the Congress, they eliminated their desire to reunite with Taiwan. And they said, they changed it to Taiwan should be part of China.
One China.
One China. That's a small change in the language, but it also gives us an idea of what they would like to do. And it may not necessarily mean to buy Taiwan.
No. I don't think it's for sale.
And you have to look at Hong Kong and what they've done with Hong Kong. Hong Kong was independent. Mm-hmm. And the agreement with the British is that Hong Kong would go back to China after 99 years. And Hong Kong's been a thorn in their side. Mm-hmm. We've seen all sorts of political problems happening there.
The million person march.
Yeah.
1 million people. Imagine every citizen in the state of in Seattle, like rallying together and protesting. That's the size.
Yeah. That's the issue that faces them if they reunite with Taiwan, is that Hong Kong was a democratically governed area, and look at how it grew compared to mainland China. It really benefited from mainland China, but it had a very big difference with where they were.
But there's also some geographical differences. I mean, like the Kowloon area, the greater Hong Kong. I mean, yes, they're little islands, but there are roadways and bridges that connect to the mainland at this point, right? There's actually a man-made bridge that goes underneath the water. It's very cool. I actually got to go across it. But they're physically connected. Taiwan, it's an island. It's still 100 miles away. So it's going to be a lot more difficult. They can't just shut down the media in Taiwan, right? Like they can in Hong Kong. Because, I mean, ultimately, that's how they took Hong Kong, right? They shut down the media. They cracked down a police state, military style police, and they just took it with force. But, because of the geographical differences, they won't be able to do that with Taiwan.
Yeah.
So what does this mean, Mike, for the rest of the world? What does this mean for the United States?
I think there's a number of issues, and we've looked at some of those.
What does this mean for our, our clients, our stocks going forward? We just saw this morning that China said they're going to relax some of their COVID, and we saw this Chinese stock market. I forget what they call it, the dragon. Did you see it? It was an index called something with dragon in it, but Alibaba and Baidu and those companies were up double digits this morning, 9-10%.
It's going to ripple through the global markets. It's going to ripple through. It's going to have an impact on commodities. And, we limited the chips that China can get. The chances are they're going to limit some of the commodities which they ship to us. But it's also going to affect where the commodities go in China. And it's going to change not just commodities, but a lot of other areas as well. And we're starting to see that. Look at the number of electric vehicle sales. I mean, Tesla is off 70 or 80% the last couple months in China for a couple of reasons. One, people aren't buying. And two, the Chinese would rather have their own electric vehicle suppliers. When you think about a Seattle company like Starbucks and their penetration, how many thousand stores do they have in China? If you have an income that peaks out, that's going to have an impact on what happens in those stores and what their growth can be. We're going to come back and talk about the impact on the rest of the world and where we are. But that's what's really important about this whole thing. Both our previous program and this program, we've talked about China and the impact of China. It's interesting to talk about what's going on, but it's more functional to know how it's going to impact investments in the United States and the rest of the world, because it will have an impact. And the idea of this program is to be ahead of the curve instead of behind the curve, to see what's coming before it happens. And that's why we're talking about China and the impact of this. It's important to understand where we're going and what the impact is going to be on U.S. companies, what the impact is going to be on world companies. And it will. All of this is going to spill out and spill over. That's what we're talking about. And we're going to come back to that. So don't go away. This is really maybe the most important aspect of what we're talking about. How is it going to affect the United States? It will affect the United States. How will it affect our investments?
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike, Chris, and Al.
So we've been talking about what's going on in China. We had a preceding program. We talked about the impact of the Biden administration and what they did with chips. We talked, and to a lesser degree, what the Trump administration did, beginning with 5G. All those have had an impact on China. But China itself, in reaching this middle income gap and moving from a consumer economy, or moving from an industrial economy to a consumer-driven economy, is having some real difficulties. And we're starting to see the impact of all that. If you look at shipments to the U.S., Chinese shipments that have come to the U.S., they're at the lowest level they've been since COVID. And COVID shut down a lot of shipments because factories were closed down. Part of that is due to the fact that China has the zero COVID policy, so they're shutting plants. But part of it also has to do with the fact that supply chains are moving back to their original nation. You see Intel building a chip plant. You see Micron building a chip plant. You even see Taiwan Semiconductor building a plant in Texas to move chip manufacturing back to the United States. And that's having an impact. That doesn't even count the smallest chips that people are producing. That's some of the bigger chips as well, moving out of China back to the U.S. or back to the originating countries. It's adding pressure in U.S. companies that are shipping to China, but it's also sending a weaker Chinese economy, which actually assists the U.S. in outperforming them. In Europe, what's happening is there's a decrease in demand for European exports and a decrease in Chinese equipment that's shipping into Europe. I think people are becoming very aware of this whole point that China wants to become the world leader and they want to dominate. Al talked about the number of ports. Chris has talked about the economy. People are beginning to see the weakness in the Chinese area and the Chinese economy. When you look even at the Chinese economy and what's happening there, car sales in China have essentially collapsed. If you look at BMW or Volkswagen or Tesla, their sales have dropped like a rock. Tesla sold just 1,512 cars in April, down from 65,000 they sold in March. And Toyota has continually missed their production plans, primarily a lot because of lockdowns, but also saying Toyota, which intended to turn out 750,000 Toyotas, is going to produce less than 700,000. And that's a double whammy for the global economy. The country isn't a huge market for the rest of the world's goods, but it's a manufacturing dynamo. And so as they close down due to COVID, due to lower economic conditions and lower manufacturing, that's having an impact. That's having an impact on supply chains. And we're seeing the impact in the United States. We're seeing the impact around the world. It also means costs are going to rise probably in the United States. There's an inflationary impact. When you go from a low labor cost to a higher labor cost, you either have to gain productivity to offset that, or you have to pay higher wages and higher prices. And that's going to be an inflationary impact in the United States. It's going to be an inflationary impact in Europe and in Latin America. China was, in 2021, 18% of the world's GDP. If that drops off, that reduces their demand for goods from outside and reduces demand for products from the U.S., demand for world products. You know, the whole idea of the zero COVID policy, and I think you mentioned that's changing. Mm-hmm. That affects supply chains.
And you talked about the inflation, Mike, and the rising of U.S. interest rates causing the strong dollar, putting pressure on anything that that the Chinese want to buy from us is going to be twice or three times as expensive as it was before.
But what's scary is if we don't move on from China, if we continue to stay more and more reliant on them, because like what we haven't talked about is part of their influence is actually working. It's really working around. We talked about the ports and how they're owning a lot of a number of different ports, but even things like traveling. I remember when I was traveling in Southeast Asia, and especially in countries like Vietnam and Cambodia, when you go to customs, there were two different lines. There was one line for the world, right, where everyone, the Australians, the US, everyone else that was coming, right, we would all go to that line. And there was a separate that said Chinese only. Right. And this was in multiple countries, and I'd never experienced this before. There was a special customs for Chinese only. And it goes to show the influence that they have in some of these countries where they now have their own separate like vacation spots. And when Vietnam, in Ho Chi Minh, actually, some of the tour guides would talk about the influence that the Chinese have had, especially on like their metro. They built this, or are supposed to build this huge train network to go through the entire country. It started in 2012. It was supposed to be completed in 2017, and now here we are in 2022, and it's not even done. But no one gets upset, right? Because the influence in which China now has, like if they were to say anything, even though they're in Vietnam or they're in Cambodia, wherever they may be, they can't say anything because she still, in a way, rules their country now because they've bought it out, and it's scary.
It is.
And that's the same thing that happened in Europe. Is they couldn't say anything because they were basically in bed with them, and they knew they couldn't lose that partner, so they couldn't really complain about it.
And when China owns your ports, when China owns your power stations, mm-hmm. when they own the roads, mm-hmm. when they own the airports, it's hard
when
for
they
these.
Own your government.
And yeah, essentially they dictate the terms, and that's been a big concern about human rights, because when China owns your ports and your railroads and your airports, and you protest human rights, they have the ability to shut them down.
Mm-hmm. Well, is it the Uyghurs or something like that are actually enslaved in China?
Those are called re-education camps.
Oh, excuse me. Have you been taking money from the Chinese, Mike?
Well, it's like they were giving the NBA a problem. The NBA wanted to open all its China, and people were saying, "Hey, wait a second, they're terrible human rights. So why would you want to do that? You know, you can complain in the United States about human rights, but they have worse, terrible."
I remember a tweet that LeBron James put out. He said, and he essentially condemned Hong Kong. And he said that people need to educate themselves on the issue.
Yes, indeed.
LeBron is bought out.
It's going to have an impact. It's going to there's going to be winners, there's going to be losers, but there's going to be fallout from what's going on. The purpose of what we've done in this program and a previous program is to let you, the listener, know what we think and to point out some of the areas that are going to be difficult, because it will impact investments in total, and some very specifically, some winners, some losers. And that wraps up what we have to say today. Be aware. All the news you hear about China may not be that good.
Mike, you mentioned France in the beginning. If China tries to move towards democracy, they're going to end up like France with Louis XVI.
He lost his head over the whole thing.
Well, that's what the French could do him a favor and export him some guillotines, right?
Have a very great week, and we'll be back next week with more insight into About Money.